Hi, very good morning. You're watching Trading Hour on CNBC TV 18. I'm Ekta Batra and with me is Prashant Nair. Well, it's turning out to be a session where we are definitely seeing some amount of relief for the market. So the Nifty is just about higher by around 18 odd points, given up all of that exuberance that we had seen initially. But the lower crude prices as a whole is providing relief for us. Asian markets are largely mixed. They recovered from the initial weakness that we saw despite the volatility that we saw in the US markets. So that's something to note. Separately, a lot of numbers which are either, a lot of stocks which are either reacting to numbers or are going to be coming out with numbers. So for example, we have Bajaj Finance, where the management commentary has really lifted sentiment and aided as well. So that stock is up around 4% odd. Oil marketing companies benefiting from lower crude. So BPCL, case in point, up 4%, and something like an Interglobe, which will be coming out with numbers today as well. So that stock also in focus. Bajaj Auto also releasing numbers today, so that stock will be in focus. Hi, Prashant.
Ekta, hi. But it is disappointing, isn't it? I mean, the way the market has come off the highs in such a quick time is, I mean, to me, frankly, pretty disappointing. I mean, you know, what did you see overnight? You saw this huge sell-off as far as US indices are concerned, and then you saw this huge pullback right from very important critical lows, and that kind of sort of set the stage for you know, Asia, including our markets, to start on a positive note, and it did. But look at what is happening to India. Look at what is happening to the rest of Asia. You know, gains have come off quite a bit, and you also have some markets now actually which are trading in the red. So it just shows you how little confidence there is really in the system at this point in time. You know, over the last, couple of weeks now, it's mostly been about local. The latest episode as far as US equity sell-off is concerned only materialized in the last couple of days. But before that, it's almost all of it been about local liquidity issues, NBFC, etc., etc. So, you know, now of course it's a mix of both. There is the liquidity issue here, and of course there is the global equity sell-off, which is panning out. It's put oil prices low, and we've discussed this earlier as well. I mean, a sell-off in US equity markets could be in a way positive. I mean, in the sense that it is deflationary. It shows up in oil, lower oil prices, for example. So I think, I mean, one has to keep that in mind when one looks at markets. But for now, I would say from you know, the 100+ point gain that we had with 15-16 points left, it's a pretty poor show, and shows just no holding power as far as bulls go. We'll see. We'll get you more perspective, opinion, etc. as we go along. There is the September aviation data, which is at the bottom of your screen. So I think we got the domestic passenger growth, which flashed. I think it was about 19% or so. You know, it used to be 21, 22, 23%. I think in the month of July it was about 22% or so. 18.9% is what we have for the month of September, and it was 17.2. So it's an improvement over August, but it is lower as compared to the month of July and maybe months before that. So we saw a sharp slip in August, and it's kind of sort of picked up in the month of September now. But that's what we have at this point. All right, Sudarshan Sukhani of S2Analytics.com is with us. Sudarshan, morning. Thanks very much. What is your assessment of things now? 10,162 on the Nifty. Well,
yesterday was a good day for the bulls because the markets actually fell below the earlier lows and then bounced back. And a similar pattern was then observed in the S&P 500, which you just talked about. See, that's a spring, that's a test of the lows, and that test has held. Now, I would be bullish on this market in the short term. The key word is short term. I would expect the Nifty to slowly find its feet and then rally towards 10,500. Now, Prashant, this doesn't happen in a day. It will take many days for this to happen. And the sellers will certainly try to push the index down again and again. But the fact that the test took place yesterday makes me bullish in the short term. So my view is that the intraday dip that we are seeing is actually a buying opportunity for both the indices, the Nifty and the Nifty Bank.
Okay, stock, Sudarshan?
Well, it's primarily on the buy side. ICICI Bank is a buying opportunity. That stock is outperforming everything. It's outperforming the bank Nifty, outperforming the Nifty. So go for it. The second stock I would suggest is Dabur. Dabur is now leading the FMCG pack. It's doing much better than the other stocks. It's a buying opportunity for the day and maybe also a carry forward trade. And finally, Voltas. Voltas has gone through a mild correction. That correction seems to be getting over. I would say traders should be willing to take some risk on the buy side.
Okay, well, we have a couple of Twitter queries for you, Sudarshan. So let's get going on that. We have Akshita, who has 500 shares of Bajaj Finance at 2,358 rupees, wants to know the view on the stock.
Well, if you're a long-term investor, the view is upbeat. Hold on to it. See, its valuations are stretched, but that means nothing. Good quality stocks will always have stretched valuations. I'm assuming you are a long-term investor. Hold on to the stock. In 3 years, you'll be pleasantly surprised.
All right, Sudarshan, thank you very much. Appreciate you joining in. And that is Sudarshan with his thoughts. Yogesh Mehta of Motilal Oswal is also with us with some trades on the F&O side. Yogesh, what would you do?
Hi Prashant. Since markets are unpredictable and gap up and gap down opening happens every day by 800 points, it seems that 10,138 would act as a strong support level or crucial level juncture. If it breaks and close below that level, then we can see again a slide towards 9,950 to 10,000 levels. But till then, we should watch out for the buy opportunity on the long side as well as short side. On stock specific front, Prashant, we are recommending on the buy side, Volta seems to be a very good setup on the long side trade with risk reward in favorable way. Currently it is quoting at 505 levels in November future, keeping a stop loss of 490 levels. Target could be in the range of 530, 535 levels. And UPL is a short opportunity. Currently it is quoting at around 622 levels in the November future, keeping a stop loss of 642. Target could be in the range of 595 to 596 levels. And one more short opportunity on the IT sector is NIT Tech. However, it has done multiple tops at around 1245, 1250 levels, and currently it is quoting at 12 and 15, 17 levels in the November future, keeping a stop loss of 1245. Target could be in the range of 1140 to 1150 levels.
Okay, all right, Yogesh. We're going to leave it on that note. Thanks very much for joining in. Well, we did have Rallis, which came out with its numbers yesterday. Let's cut across to the MD and CEO talking on the performance.
Though it's about 1% lower than last year, and I'll touch upon that EBITDA margin. Now, when we look at the second quarter, it should be seen, you'll appreciate, in the context of the first half, which in some ways embodies the Kharif season. It's also important this year to look at second quarter in the context of the first quarter as well, because if we recall last year, the first quarter we had the impact of the transition of GST, and therefore it's a placement time in the first quarter. The actual consumption and the Kharif trends actually comes out in the second quarter. So if you look at the first quarter and second quarter, or in other words the first half, that actually gives the underlying performance of agriculture, the underlying performance of the business against the agriculture context. Now, when we look at the H1 numbers for Rallis, I'm happy to say that at revenues of 1,227 crores, we have registered a growth of 18% over the previous year. And in terms of profit after tax at 140 crores, we have registered also a growth of 17%. So both the top line and bottom line, we have a healthy double-digit growth in terms of the first half, or roughly the Kharif season. Now, before I get into the performance details of Kharif season, the Rallis performance, let's look at some of those broad parameters of the environment. So when we look at the Kharif acreage, overall Kharif acreage is actually down 2% over last year, the Kharif cropping acreage. And when we look at the important crops, so whether we talk about paddy or cotton, both are down by 2%. If you look at pulses, which is the other big one, they're down by 4%. The only redeeming feature being sugarcane, which is up by 9%.
Okay, so that's the management of Rallis. We'll keep getting you the key highlights from the company. That stock is absolutely flat, reacting to its numbers this time round, where the revenue is up around 11% and the margins have been a little subdued, 18.8% versus 20.8% year on year, and a profit growth of around 10%. We'll take a break on that note, but up next we'll focus on the commodity space. Manisha Gupta will be with us.
Welcome back. So we've got about a 30-point gain on the Nifty. From being up 15 points, we're up 30. But from being up 100-plus points, we're down 70-plus from the highs. So this is volatile, but definitely off the lows, off the highs broadly. Manisha is here with a roundup of everything that's happening in the commodity and currency space. And I guess we have to put in a quick word for the oil price, Manisha, which saw that big crack overnight, and then we'll proceed to commodities. Others.
Oh, well, absolutely, Prashant. $10 shaved off in a matter of 2 weeks is how the crude oil prices have reacted. And much of that, like 4.5% to 5% of a cut that has come in last 24 hours. This actually has been the biggest day decline that we have seen since the month of July. We are trading at a 2-month lows on your screens there. And of course, apart from the fundamentals really turning around with sense of assurances coming in from Saudi Arabia that they will increase production, to US crude inventories, which have continued to surge for a 5th straight week this time around, and by a huge number of 9.9 million barrels. And then, of course, it has been about global demand concerns. It also has to do with the fact that the speculators have been unwinding their long positions on a very fast pace. So from 12:1 in sense of bulls to bears, it's now come down to 6:1 is how we have seen that decline, and the net bullish positions are now at 1-year lows for crude. So that tells you that it's not just the fundamentals which are turning around, it is the money moving out of that space as well, and at a very fast pace. And the volatility in crude oil prices definitely has led to surge in volumes in the Indian commodity exchanges here. And MCX, of course, still holds 90% of market share when it comes to commodity trading. We are now joined by MD and CEO Mrugank Paranjpe of MCX to talk about the kind of numbers that they've seen in the previous quarter, and also what is the road forward from here on. Mrugank, hi, thank you so much for joining us. First of all, the numbers that you've put out for the quarter have been on the positive side. What would you say worked in the favor, really?
We've had a very good quarter in terms of the volumes, as you mentioned. We've seen in terms of the ADT, the growth has been about 2% on a quarter-on-quarter basis. But if you see the last 45, 50 days, the volumes have been consistently up in the exchange. So I think we're seeing a very healthy trend in that sense in what we are seeing in terms of the volumes on the exchange. That has contributed well. Again, something which we have mentioned in the past, that we want to reduce the volatility of income that we have because of treasury, and that is something that we are doing. We've moved away from a lot of long-dated instruments in this quarter, and because of that, the treasury income is also stabilizing, and that's something which has again given us a good growth in terms of overall revenue numbers. Last but not the least, we continue to maintain our cost discipline, and that's where you see that we are quarter on quarter and even on a full year basis very consistently coming in at the numbers that we've promised investors on the cost side, where you'll hardly see much of a growth, and therefore overall profit for this quarter has been very good on the back of, again, some good tax numbers as well.
Mrugank, you mentioned on how the volumes actually have improved and picked up in last 30 to 45 days, and this is exactly the time that we have seen 2 other also exchanges come in your space. So as you mentioned, the volumes until now seem good, but what are you doing to ensure that your market share continues to be where it is?
Absolutely. I think we can very confidently say that while it's too early to comment, but based on what we've seen in the last 15-20 days, we haven't seen any impact on our volumes because of new entrants into the commodities segment. If anything, they may be adding to the volumes, and that would be great for the overall commodities market, that we have an increase of the pie happening.
Mrugank, you also continue to hold 90% of the market share when it comes to commodity as a segment in the Indian markets. What has been the number month-on-month basis, and what is your sense? Would you be able to keep 90% plus for the rest of this year at least now?
We track this literally on a daily basis, and in our segment, we are still tracking above 90% in terms of the market share that we have. And I think we are confident we'll be at that number for quite some time to come.
All right. Mrugang, also one final question. What's your sense going forward from here? What new products, instruments, strategies, any revamps that you're looking at to ensure that you maintain that #1 position?
When it comes to retaining this volume and when it comes to retaining our share of market, there are three things which are critical. One, we need to make sure that the products that we have continue to remain as relevant as they are today. We have the connectivity, we have the licensing with some of the international players that gives the market the confidence in a lot of our products. That's something which we intend to maintain and maintain the exclusivity in that as well. Then there are some new products that we have looked at, and again, in terms of instruments, we are hopeful that SEBI will allow index trading to be opened up very soon in this market. So I think we would see on the back of new product, new participation and new distribution, some growth coming through. But from our perspective, the most important would be that after the products, we make sure that our technology remains as agile and as fast as the market needs it to be. We have done revamps in our technology over the last 1 year. We will continue to do that. And last but not the least is make sure that our people remain in touch and in connect with the market and all the participants.
All right, Mrugang, thank you so much for joining us and breaking out all those numbers to us. So clearly, as MCX says, they are holding above the 90% of market share in commodities, even as we have seen 2 new entrants in that space. And they also said that they are working with the regulator for more products, index futures, etc. So that is what to watch out for in the next 6 months, is what MCX is telling us.
Okay, all right, Manisha, thanks very much for that. So that's the word coming in from MCX. Just want to point out a couple of stocks. TVS Motors, in fact, stands out. That stock, in fact, reacted positively to numbers yesterday, but now down around 3% at this point in time. The management had reiterated double-digit, volume growth expectations also, despite higher insurance costs, etc. But that doesn't seem to have enthused the markets at all at this point in time. So that stock down around 3%. And overall, for the Nifty, we've recouped a little bit from the earlier levels of around 10,160 odd, just speaking about that a couple of minutes ago. So we've recouped back to levels closer towards 10,200. So let's see whether we get there decisively or not. Take a break. But up next, key expectations from Kotak Mahindra Bank and Bajaj Auto. Once we're back, stay tuned. Well, hectic day of numbers. So let's start with a couple of previews then. From the banking space, all eyes will be on Kotak Mahindra Bank. Always generally a stable set of numbers, both on the standalone as well as the consolidated basis. Standalone is just the pure banking business. Consolidated has all of the other subsidiaries such as insurance, etc. Abhishek Kothari is here to tell us what we can expect. Abhishek.
Ekta, the key thing to watch will be the net interest margin movement. Over the last few quarters, it has been in the range of 4.2 to 4.35%. That will be driven by the loan growth. Now, loan growth has been about 20% will be positive. In the last 8 quarters, 7 times the corporate book has grown about 20%. So, corporate book not only has aided in loan growth, but has also given them strong fee income. So, corporate book growing in line or higher than loan growth will be very positive. They also have a low-cost deposit franchise, which is the low-cost deposit share at 50% plus. So both of these put together should drive the net interest margin for the bank. Asset quality has largely remained stable. Over the last 5 quarters, what we have noticed is the asset quality has been improving, right from 2.6% gross NPA to 2.17% in the previous quarter, Q1 FY18 to Q1 FY19. We have seen improvement in the asset quality. Continuation of the same will be positive. Any announcement with respect to the stake that Uday Kotak holds in the bank, how they'll reduce it to 20% by December 18 from the 30% that he holds currently will be seen very closely. Our poll suggests NII growth and PAT growth to be nearly around 17%. Back to you.
Okay, Abhishek, thank you very much for that. So at 4:45 later this evening, we'll have a press briefing. Deepak Gupta, Joint Managing Director, Jaimin Bhatt, President of Kotak Bank, will be addressing the media. Uday Kotak, of course, usually makes an appearance only as part of the first quarter results, and we'll hear from the others today after the Q2 results. Bajaj Auto is also going to be coming out with its numbers for the second quarter. Sonia is here. with a quick preview of what to expect. Sonia.
Well, thanks a lot for that. It's expected to be a mixed bag this time around. While the revenues are expected to be very strong, the pressure will be felt on the margins because of higher commodity costs as well as aggressive pricing that the company has undertaken in some of their key products like the CT100. In fact, the blended margins will be under pressure because the product mix has weakened. They have sold higher number of low margin products. So just to give you the key numbers, on the revenue front, like I said, it's a strong set expected. A 22% revenue growth is what we're factoring in at 8,028 odd crores. That's because the volume growth has been very healthy this time around. A 25% volume growth is what Bajaj has clocked in, led by almost a 40% growth in the three-wheeler segment, and the domestic bike volumes are up by almost about 20 odd percent. But the realizations will be under pressure, so the realizations could decline by 3% year on year, 1.5% quarter on quarter because of a weaker product mix, and hence the margins will decline 250 basis points. Now remember, the stock is already down about 25% in 2018, and the street is factoring in a weak retail demand in the second half of the year. A lot of dealers indicate that there's been a 15 to 20% downtick in bookings in this festive season, so that's a bit of a spot of bother. Otherwise, a mixed bag expected. The key focus will be on the margins, where we're expecting a 250 basis points decline.
Okay, so margins would be the key factor to watch out for. We will be the management will be joining in at 2 p.m. this afternoon, so do watch out for that. That's on Bajaj Auto. But Sonia, stay with us. There's Interglobe also, which is coming out with numbers. It's not really getting any sort of respite from lower crude prices. In fact, maybe a little more trepidation ahead of its numbers.
Oh, absolutely. It's going to be another shocker on the operational performance this time because crude prices have surged in the quarter gone by. So on the revenue front, things might look good. Kotak is estimating a revenue growth of 22%. That's because passenger traffic has been very strong. A 30% growth is what we've seen. But it's going to be a sharp margin compression that Interglobe sees on account of two factors. One, ATF or aviation turbine fuel prices have gone up by 5% on a quarter-on-quarter basis. And two, we've seen the dollar-denominated costs rise for aviation companies because of the fall in the rupee. So this is going to cause an EBITDA loss of almost 500 crores for Interglobe compared to a profit of 700 crores same time last year. And on the net front as well, a loss of 466 crores is what Kotak is estimating. Now, two key numbers to look forward to: yields. Remember, last quarter yields had fallen 5.5% year on year. Interglobe was the worst of the lot. They reported 3.62 rupees per kilometer. There's an expectation that that could worsen this time. And EBITDA margins, that is earnings before lease rentals, had fallen to a record low of 17.4% in Q1 of FY19. There is more pressure expected this time around. So no relief just yet for the aviation companies.
Sonia, thanks very much for that. And it's going to be an important set of numbers with Bajaj, Interglobe, etc. reporting later today. We will take a very quick break here. We come back 20 points on the Nifty, so there has been another 15-odd point climb down, which we've seen, 10,169. So what should you do? Ashwini Gujral is going to be joining in on the other side to tell you just that. He'll put out his trades and take some questions. Back in 2. Is disappointing. I mean, if you're hoping for the gains to be held, etc., none of that. 25 points is all that is left on the index. Ashwini is with us, as always, on the top of 11:30 for what he's making of things. Ashwini, morning. How are you looking at this price move so far today?
So I think it's a great price move because it gave you a 300-point gap up on Bank Nifty, which you sold and you made money. Now it's holding on to 10,115. Not only that, IT is now bouncing back. So we were seeing this IT going down, banks going up, etc. If IT also starts to support the market, then I think 10,150 you can hold on. So this is a good time to get long on Nifty, Bank Nifty, etc. Keep your 10,150 stop. I think now the risk reward is good. It wasn't good when you were 350 points higher on Bank Nifty and 120 on the Nifty. So we are making this higher base. Yesterday's low was 10,100. Today's low seems to be 10,150. So sentiment changes take a while. I mean, just because crude fell off, so immediately everything should start running up. I think that was a misexpectation. Having said that, Federal Bank is a buy with a stop of 79.5, target of 86.
SBI is a buy with a stop of 254, target of 270. And Voltas is a buy with a stop of 518, target of 540. I would think, second half, you may see a recovery which almost takes you back towards the highs of the day.
Ashwini, at the risk of repetition, I'm sure you've been asked this question before, but what is the probability of, slipping below 10,000 for us and probably hitting those March lows of 99.50, 99.60?
I think very low if crude stays here. Why? Because that will need, certain large triggers. For the moment, you should expect, we are in a sideways market, 10, 500, 550, that should happen. On the bank nifty, if crude remains weak, I think you'll have a larger rally, which could go even up till, 25,800, 26,000. See, breaking of 10,000 will need something else to break, either global markets or crude or something else. See, sometimes fall of crude also indicates, global growth weakness. That point hasn't come in yet. If that comes in, then all bets are off, because like in 2008, you saw crude at 30 and Nifty at 2200. I think that's a bit off, but for the moment, you should position for an upside move, because this market needs a breather before it can, fall again.
And range is what? I mean, from around here till the 200-day, Ashwini?
Broadly, I mean 10,700 thereabouts, because if the financials start to recover, IT does not fall, then the whole market is poised for a decent pullback. We haven't had a pullback in last 2 months.
But look at the state of financials, Ashwini. I mean, look at RBL and Yes and whatnot. It isn't inspiring any confidence at this stage, is it?
But what's wrong is known. I mean, risk is in the price. At 400, we didn't know anything about what's going on in Yes Bank. At 1500, we know what's wrong in IndusInd Bank. So, price correction, markets tend to price stuff in, and once it's priced in, they tend to, behave based on oversold or overbought conditions. Right now, you can throw what you like on this market. It is oversold, and those indications are coming.
What about pharma? Sun Pharma, positive news today. Stock is down 2%. In fact, it's lost, 7.5% this week.
See, the pharma index is almost at its 200-day moving average. So, markets have these silly correlations that, IT must go down because rupee is appreciating. Rupee is not really appreciating. So, now I would think pharma, IT, financials, they could have a coordinated run on the upside, because the big macro is probably on the sidelines for a while.
Okay, well, the positive news for Sun Pharma was that they launched that particular psoriasis drug, which is in their specialty segment in the US markets. They had already received approval in March, tildacrozumab. So it is definitely positive for them. It's a milestone approval for them and launch. But anyway, Ashwini, a couple of queries then. We have a Twitter user who has 4,000 shares of Equitas at 177, wants to know long-term view.
Microfinance type of situations, they haven't really played out very well. Since, even good stocks are, doing well, I would, recommend a switch. If you don't want to do Kotak or Bajaj Finance, etc., then maybe even a federal bank could do well over the next 6 months or so. I don't think Ujjivan, Equitas, etc., for the moment are going anywhere.
Okay. All right, Ashwini, we'll leave it on that note. Thanks very much for joining in and speaking with us. So that's the technical view coming in on the markets for the Nifty, 10,192. So we're stabilizing at those levels, advanced decline ratio also in positive terrain. Up next, we're going to be speaking to Dhananjay Sinha of Emkay Global to discuss fundamentals of the market. Stay tuned for that conversation.